Hey everybody, Preston Brent here with our Trader Use Group, a weekly roundup. This is for the trading week ending October 16th, 2015. We're halfway through the month of October, which has traditionally not been too kind to the U.S. markets. But what I have on the screen here is the cash index, the SPX. And I just wanted to take a step back again and just review a couple of key things with you guys. So let's just take a look and see how this thing is shaping out here. The first thing I wanted to do is show you that I've got the Fibonacci extension off the lows and the highs of the previous big cycle that we had moving here. What I did was I carried the extension from this pivot high back here in 2007 and the pivot low in 2009. That was that big down move that we had. And you can see I extended it up, and we are butting up against our 6-1 extension off of this previous pivot high back here in 2007. That is a very common uh, um, point that acts as um, uh, tremendous resistance, and you can see we came right up to it. We're actually shy of it by maybe a couple of points, but you can see where we're just hitting on it, and right now we're sitting um, almost right on the 50% extension off of this pivot high here back in 2007. So you can see where we're sitting, and I do believe it's going to be very difficult to get through and punch through this area here. But should we do exceed this 21.37.21, then I believe we've got a lot more room to run to the upside, although we're having a nice little bounce right now. We got to be very careful because the data that's coming in, the economic data that's coming in for the U.S. markets is kind of mixed. We're getting very slow regional manufacturing data. We've got some positive on consumer sentiment, and the earnings so far as we're going through them are also coming in mixed. So we got to really see how this thing is going to play itself out here, before we commit too much. So if we look at this, you can see exactly how this thing is shaping up here with these. Now, if I take it down to the weekly, and let's zoom in just a little bit closer here. Of course, for our members, we've been talking about the limited market breadth. You could see just here this divergence that led all the way up to this big pullback. In fact, we've been in this divergent mode really since late 2013 as we've gone through. And you can see now the extensions off these previous pivot highs, which really started around 1572, and how these are really shaping up to be hard nuts to crack, if you will, to move any higher. We've had a pretty good bounce off these double bottom here. You can see this double bottom test right here, and now we're shooting back up here. A lot of people are afraid we're going to just come up a little bit higher, run into resistance, and come all the way back down again. I'm not convinced that that's what's going to happen at this point in time, although I do believe we are susceptible to some more down move. So you can see how this thing is shaping up here. Now, if I put some additional drawings on the screen here, let me just come over here and put it on here. You can see this subsloping trend line. I've also added the opening price of 2015, which is this blue dash line on here, and I've got a couple of other price levels that are potential resistance points as they've set up here. And if I switch over here, you can see on this weekly chart where we're sitting here. Now let's take it down and we'll zoom in just a little bit more and go take a look at the daily. And you can see on this daily chart, I've also got on this daily chart a couple of key price levels, but you can see this almost double touch that we had down at the bottom down here like this. And then we had that tremendous bullish divergence pattern, which gave us this springboard up here like this. I do believe we're probably going to run into resistance up in this area right here. We've got a number of different things that are going to provide resistance. We got this little minor pivot right there at 2044, and then we've got the opening price of 2015 for the SPX at 2058. and we could get stuck in this zone a little bit before we have a little bit of a pullback. I don't believe this pullback is going to go too deep. And then we're probably going to make another run attempt at it right here. Keep in mind that we're in the middle of earnings seasons. It's mixed so far. Companies that, even though they may hit their earnings per share, those that are missing top line revenue estimates are getting punished, and those that are reducing their forward guidance are tremendously getting punished. You can see what happened with Walmart when they reported their forward guidance, and they fell, I think, the most since the 1960s or something. I mean, they just really had a huge down move. They're blaming it on higher hourly pay that they've got to do, but it really hurt them dramatically. But that's what's happening right now. You can see in the markets here. Now, if I were to add on here, let's say another Fibonacci, we'll just lay it on here like this, and we'll do a fib from this low right here to this high right here. You can see here now just a normal retracement. Let's extend it even more so that you can see what I'm talking about on this weekly chart here. So I believe we could run into some resistance up in this area right here, as I indicated before. Now, again, we're looking at the cash index, not the futures. So we've got a very wide range right here that we're hitting this resistance. We got this pivot point right there, a prior pivot low, and then the opening price of the year. And I will call this our R1 zone, which is a pivot zone up in this area here. So I would expect some resistance in this area and a rollback somewhere into this area here, just south of 2000, maybe 1995, 1992. You can see this zone right here is a pretty solid resistance zone. And when we finally broke out of it, notice we broke out right here, okay? We came back up, we had a retest here, and then we shot higher. So that is a positive retest. So to me, the natural inclination of the market is to come back and do another test again when we get up into this zone. And then where we go from there is going to be telling. And this may set up, from a timing perspective, the meeting that we have with the or the government data that's going to come out of the and the results coming out of the FOMC and the Feds, not next week, but the week after. This was option expiry week this past week, and we kind of grinded higher Thursday and Friday, which is a typical move for a monthly option expiry. But this is kind of how I'm watching the markets right now and what I would expect. Right now, I would expect this level on any potential pullback of around 1995, probably down to about 1992. I would expect that to hold, okay? I would also expect this area here to prevent any further incline in the SPX. I would expect we could stay in this wide chop mode right here where we move up, we come down, and we kind of do this until the market figures out, do we want to go higher or we do want to go lower? And we got a lot of people in the market trying to figure out, well, do we play good news is bad news or good news is good news kind of thing? Because remember, the Feds are still on record as saying they want to raise the rates this year, or they see, based even on the data showing that the U.S. is slowing the expansion. The markets are still expanding, but very slowly. The Feds are still on record as saying they want to raise rates this year, although the futures market seems to indicate, with the data that we got with the jobs report a week ago and that huge reversal, that the markets believe the Feds are going to push off to 2016 when they raise their rates, which I think is part of the reason we've got a little bit of a lift here. Nothing else has changed in the markets. We're still expanding, but very slowly. So that just says, to me, we can expect more chop in the markets. We can expect, just a little bit more of unsettledness, I guess, is probably the best way to say it. Okay, so that's kind of where I'm seeing the SPX at this point in time. Okay, so I'm going to take this off the screen here, and we're going to come back to this right here. And I would also, one of the things I wanted to show you, because I think you may have seen it when I was flashing the screen here, that we've got uh, right here. One of the other things that I look at is market breadth. Okay, it's very important, and you can see this down sloping line right here. I mean, clearly you can see it. And this was as we were making new highs in the SPX. Okay, this is the SPX down here, the cash price of the SPX. So we were basically moving up that way as we were going down here. So that was a huge bearish divergence. And this shows the percentage of stocks over the 50 EMA. And we actually took out that low level right down here. And this was back in October of 2014. We had that big, huge pullback there. But you could see, even starting in 2015, we were making lower highs. So as the markets were moving higher down here, the percentage of stocks participating in that move was getting fewer and fewer, or less and less. And then it finally gave it up right in this area here in August, and then boom, it was looking for a catalyst, and away we went. I mean, it was the biggest jump in volatility in the history of the markets. And then we kind of settled in down here. And we did this little bit of a double test down here, but notice the bullish divergence on that double test that we got right here. So, and now we're sitting right at 62.8% of stocks are above their 50 EMA, which is a very good thing. The more stocks above the 50 EMA, then any pullback tends to hold. If you've got fewer stocks participating, in a movement, then when the markets pull back, those few that are stronger tend to give it all up, and then the markets just really do a very strong swan dive. So we want to stay above this 60% level. We may come down and test this support area here around 55%, but we do want to maintain this. Okay, now if we look at the other one that I've got the same chart, but on the 50 EMA right here, or I'm sorry, the 200 EMA, which is really the longer term breadth of the market. You can see this first line right here. That was the lows made back in October, and we're just now trying to take that number out. That was the damage that was done. Notice last October we pulled back, the markets pulled, or the SPX pulled back about 10%. We came down, it gave us a V bottom, and then we just shot right back up. Not so here. We took out the lows as far as percentage of stocks and participation, and we came down very, very low. And now we had just about the same kind of indication on the 200 EMA. We've regained 40%. Actually, we're at 42% to be exact. But you can see this downsloping line right here, which is over 45%. I'd like to see us at a minimum take that out and take out these pivot lows here, getting us back over 50%. Now, ideally, in a more of a bullish market, we want to be over at least 60% of stocks over their 200 EMA. This is longer term. It's going to take us a little bit of time to get there, I believe. It's not like the 50 EMA, which is a little bit more sensitive to week movement. So, but we do want to get over that, which is this higher sloping but still down sloping line here off these highs right here, which would put us around 65%. So we still have a ways to go. But until we can recapture 60% on the 200 EMA, and we maintain, of course, the 50% on the or the 60% on the 50 EMA, then that tells me that any pullbacks are going to be more shallow in nature. Okay, any pullback that we get on the SPX will probably be more shallow in nature, and then what we can expect is it'll be more of a buy on the dip kind of thing, where we kind of run up into this R1 zone up here as I indicated, and then we pull back somewhere in this area right here, okay, which is just south of the 1995 area, which would be our about a 23% pullback from this price distance right there. That would be more expected. And also even down to the 38%, which is another fib node right down in this area down here. So this would be what I would expect over the coming weeks. If we blow through that, then we're going to come down and do a double test here. We may get a momentary move down if the Fed say they're going to raise the rates this year. They're still on target. We got to watch very closely to see how the markets are going to react to that. Okay. And these reactions, it's not so much what we hear, but it's how the markets react to it, which is how we have to play it, right? I mean, our members in our user group are doing well this year and following some of the guidance that I'm putting out, because we've been spot on for the year as far as where the markets are going to go and when they're getting weak and when they're kind of shoring up, and whether we're in a buy on the dip mode or sell the rally mode, because there are two different sentiments that we need to watch here. The other thing that we're watching, folks, is the volatility. And if we look at the VIX, right here, this is a daily chart of the VIX. You can see this shaded range here. We just blew through the lower end of this shaded range. And this past week, the other thing that we did was we went back into a contango environment on the VIX futures, which is a good thing. It just means that the near-term volatility futures is lower than further out in time, which means risk is coming off the, or fear rather, is kind of coming out of the markets just a little bit. You can see here the VIX closed at 1505. It's still elevated from where it was most of 2015. As you can see, most of 2015 was spent in this area right here. You know, anywhere from 15 all the way down to about 1175. So we're at the upper band of where we've been most of 2015, not counting what we had here that really started kicking off around August 19th, August 20th. And if we, so we've got to watch volatility very closely. But in watching that, it'll help kind of guide us. The other thing that I'm watching closely as well is the bond market, because bonds yields are still very, very low, lower than I would like them to see. And the bond market has been very good prognostication this year of just where the equity markets are going to go. You can see right here, looking in July timeframe, right? June, July timeframe, the bond market kind of stabilized. We had this bullish divergence here, and then boom, we're off to the races. And then as we go through the timing of the markets, you can see here the huge August down move in equities, how we had bonds spike up in this area here. They pull back a little bit, but now they're still moving back up here, and this again is on the speculation. The bond market is essentially saying they don't believe the Feds are going to raise the rates this year. If the Feds come out and they end up doing that, we're going to have bonds back down in the 151 area. I'm a longer term short in the bond market. Near term, I think the weakness in the low yields, the higher strength in bond market tends to show me or tell me that the market still believe the Feds are going to push off their rates till next year. And obviously, the other thing that we've been following here is the gold market. So if I put gold up on the screen here, you can see gold futures. We had this key break in this downward sloping trend on the gold futures market, and I said gold would need to clear this 1132 area before I got interested again, and I'm now interested in gold. I have been playing silver for quite some time. Our members know how I've been playing silver using puts. And it's just turned out to be a great trade. You can see how silver's been moving up really since August, since we had that big spike in August. And then towards the end of August, silver has moved up dramatically. It's up to about 1621 right now, and that's from a low down around 1393. So we've got a long-term play on silver that I think is going to work out very well. The other market that we're watching very closely is the energy market and oil, because it does affect just about everything else. And you can see here we're back into this tight zone here, and oil tends to I had projected oil moving down actually below 40, and we came right down to my target here. We took this trade to the downside. It turned out to be a great move. We started getting short oil right around July, early July, and just through the entire month, July and August, just playing oil to the short side. And then we got out when it moved back up here, and now we're in this range bound event. I do believe near term oil is probably more to the downside than the upside, at least near term. I think longer term, there's going to be a great trade in oil to the upside. Our members will be in tune with it. If you're not a member of our group, by the way, I would highly encourage you. I've got a special on with this update here to check us out. Now, one thing that I'm going to be doing in December, just be checking your emails. We're going to be doing an on-site meeting here in the Connecticut area in the United States, but I'm going to broadcast that live as well. So it should be a lot of fun. A lot of local members here in and around New York and Connecticut and Massachusetts, Rhode Island, even up in Montreal, Vermont, and some of the New England area, the Northeast area of the United States will probably come to the event. But for those that are remote, you can check us out, and it will be a free event. So for those of you that are here, that are looking at my updates, whether you're looking at them on YouTube or you're checking them out via Twitter or a link to our blog, I highly encourage you to check that event out. Mark your calendar. It'll be December the 5th. Starting probably around 9:30, maybe a quarter of 10. I'll get the direct times out or the exact times out later, but probably 9:30 in the morning, New York City time, December the 5th. So mark your calendar. All right, everybody, that's the update for the week. Members, I will see you Sunday night for our weekly market watch coming up. We got some key earnings coming up, and we got a couple of key things getting ready to hit the market, so we'll watch them closely. Have a good weekend, everybody, and I will see you members tomorrow night. Bye now.